Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. Peter Grandich of petergrandich.com is a leading expert in the financial and commodities markets. Peter is a seasoned pro, investor, speculator, and a friend. Peter, thank you for coming back on the show.
Always willing to join you because you're a big deal.
Thank you. This is my favorite stocking stuffer gift, so I figured I'd throw the giant deck of cards in the background. Okay, let's start off like we always do, Peter. And what is your macro view of the world economy and financial markets today?
Well, of course, it's always a moving boat kind of like, and with the change in Trump so radically different, there's really no commonality from the past administration, both on the local front as well as the geopolitical. And right now, the man is a mover and a shaker. That's the one thing there's a lot of things you can say about him, but he's a mover and shaker. So I think some things are in flux right now, and it all depends. You can't take everything based on the first few days, but basically, I think he inherited an economy that's weaker than was being told. And I think he probably knows that. He's smart enough from an economic side to know that. I think he's clearly shaking the ground, looking to restructure how other countries in the world deal with America versus how he felt it was being dealt with. How far he'll be able to go with that. Is he going to make Canada 51st state? I doubt it very much. Will it cause, or did it help lead to get the current guy there out of power and possibly a more conducive person to deal with that Trump would like to see? Yeah, I think that's part of the hidden agenda in that. But some of the geopolitical stuff, I think probably the most positive one is going to be that the war in Ukraine is going to come to a screeching halt. There's no question now how Putin's responding and how he's speaking and all, and how he's already cut off Trump's Ukraine getting more money. NATO's not going to pick up the bill on their own. They knew that they were leaning on us to do it and all. So I think that would be the positive. What's still unknown, and I don't think we'll know for a while, is how far China and Russia may readjust their plans versus the plans they might have had when Biden was sitting in his seat.
Okay, so he inherited a weak economy, as you say, and I think that's an understatement, but
weaker than we've been led to believe. I think many of the numbers we're going to see readjusted, and I had myself did an interview with a guy I like very much earlier today, and he talked about how they really played around with the seasonally adjustment last in December, and if you take it back to a more regular, we actually had a job loss. So I don't know. Again, it's not in Trump's favor to get him back to where it's showing big losses because he's on the clock now. But hopefully there'll be some more realistic numbers, and clearly we weren't getting from the Biden controlled administration.
Yeah. Okay. All right. So inherited a weak economy. You also see the war coming to a close, which is probably
Ukraine one. I think the Middle East was a pause, and then he's going to get more behind Israel. But he's also going to try to return. Remember, in his first term, people did not give him credit for a lot of movement he made in the Middle East. He had 2 or 3 significant Arab countries aligned with Israel. Saudi Arabia was in advanced discussions. I think that's his long-term plan to get that back into mode. And also, he knows privately, they're never going to say it publicly, they're against Iran. Saudi Arabia doesn't want to see Iran with a nuclear bomb, that kind of stuff. And also, I think he's going to try to isolate Iran like he had it before the Biden came in and, sent the barrels of money over and actually made it all the work that Trump achieved on it and was lost.
Yeah. Okay. You kind of alluded to the next question from Freedom Fighter about any abnormalities in the U.S. job numbers. Maybe pontificate on that for a minute.
Yeah. So one of the problems, which I wish they would change, which I don't think they're going to do, is, there's 2 sets of numbers that come out. When we get caught up on the employment, we don't look at the household. In the employment number, if you took 3 jobs right now to keep your family going versus the one you had, even though it may all add up to just the same amount of money you were making before, when they come and count you, they're going to count you as 3 people employed when it's really one person doing 3 jobs. And one of the clear changes in those numbers over the last few years is how many more part-time people are having to work 2 or more part-time jobs. We continue to have two different economies. If you're in the 5 to 10% top earners, you're doing great. You don't recognize a lot of the issues that the other 90% is becoming more difficult to deal with. And so I just hope there's a more realistic look at the true employment than how it was done during the Biden administration.
Yeah. Okay. So they're doing double and sometimes triple counting, depending on how many part-time jobs you got.
And the really thing that gets you really upset, Steve, is the seasonal adjustment. We don't know what number they use. Then they use these birth numbers that they assume certain amount of people were. All you got to do is massage at a difference of 5 or 10%. You can dramatically change your number and all. So, but there are ways to see through it. And there are people like this guy, Greg Weldon, who I referred to earlier. Rosenberg up in Canada does a great job really looking at getting deep into employment numbers and all. One thing is for certain, like we said earlier, the economy was weaker than it was appearing to be at the tail end of Biden's administration.
Yeah, I interviewed John Williams of Shadow Stats a couple years ago, and he pointed out something to me that I wasn't aware of. And he said, if people haven't had a job, working age people have not had a job for over a year, they're simply removed from the equation, and they're called discouraged workers. So how many of those are around that aren't factored in, you know?
Yeah. And there's also going to be a change, and this is not going to happen in the next month, but if there's a dramatic change in the illegal immigration that clearly in its first few days, if it continues at this rate, there's going to be some also issues about on the lower end of workers, because a lot of these people were filling certain jobs that, may become more difficult for employers to fill. But that's all down the road. That's not something to be too concerned about at this moment.
Okay. Another listener question. Steve wants to know, he says, I would like to hear Peter's call on interest rates and bond yields 6 months to 3 years out.
We had a 40-year bull market from 82 to 2022, and the bond market's been in a bear market ever since. If you can't, you'd have to be in the business when I started 40 years ago, Steve, and you were told by sales managers for 20 years, hey, listen, if you don't want to take risks, just put your clients in bonds. They can't lose there. Well, that turned out not to be the case the last couple of years. In fact, they poorly performed. And I still think that's going to be troublesome for them. I do think that a lot of people are chasing corporate paper now because it's yielding, well above CD rates. I'd be very careful because of a lot of debt that was floated a few years ago has to be restructured in the next 12 to 24 months. So I would argue that we'll probably see longer rates higher, but we may see actually shorter rates lower, because that's where the Fed could act, because the Fed is going to try to keep the economy going. And of course, if I'm right and it's not as strong as it is, they'll still have to show some support on the short ends. But net, I think interest rates work higher, not lower.
I'm kind of seeing the same thing on the charts. When looking at the 10-year, it broke out of a, I don't know what you'd call it, kind of a resistance line. And it looks like the 10-year is going to 5% to me. I could be wrong.
Yeah, I think 5% is the short part. I think as we get into 2026, it can even go higher and all, because one of the things that I believe is not going to happen with the Trump administration is we're not going to see any work done on the debt reduction side. And I think if we start to see that we're approaching 40 trillion or more, whatever it may be in just a year or so, I think we could see real concern by people outside the U.S. getting real concerned and are going to want a higher interest rate in order to take the risk to keep buying our paper.
Yeah. Okay. Blaine is curious. He says, do you think you'll ever be able to set aside your investor psychology and board the Trump train with your wife, Mary?
Well, my wife she spells MAGA in her sleep. So she is definitely a 100%. She could even be talking to me, and if she heard the TV come on and Trump's on, she leaves me to go watch him. About 40 something years of marriage too, I think impacts that as well. I am not a Trumpster. I've always told people, but people assume that means you don't like him. No, I like him very much. There's just some things I'm not a big fan of him, and I'm not I don't believe he is the second coming as people are somewhat treating him as. He's certain a million times better than Biden and a zillion times better than the person he was running against. So I'm very glad that he won the election. But again, I want to go back to, I still think there's three huge problems, Steve, in America. And I don't see him doing anything much on those three: the debt crisis, the retirement crisis, and what I've talked about before, the unfortunateness in California, the natural disaster and the crumbling of infrastructure. And I think those are going to become so burdensome that even with the good work that he's done in straightening the border, getting rid of wokeness and DEI and all that stuff, net, there's still going to be. So I root for him, and I hope maybe even he does better than they've been. I give him expectations, but I only have one God, and that God is named Jesus. So that's the best way I can answer your followers' question.
Okay, I feel the same way. I think he is far better than our alternatives were. When you try to price control groceries, you don't get cheaper groceries, you get no groceries at all. So that would have been awful. And putting on taxing unrealized capital gains, I don't even want to know what that kind of accounting nightmare that would have been. So what we got is better than that. But he's still not addressing the three concerns that you see, which is debt, the retirement crisis, and a crumbling infrastructure across the U.S.
Yeah, now people can argue, and it's a legitimate argue that say, listen, he's got to work on a lot of other things before he gets to that. That's fine. The problem is he's not going to have as long as a period as much people think. In less than 2 years, we're going to have another congressional election. And unless he really keeps up the steamrolling that he's got now these first few days, people are going to be not as supportive. And then it's going to be much harder for him to go, because then he'd be almost to the point that last 2 years where it's lame duck and all. A lot of this is going to have to do, no one spoke, maybe they haven't, I haven't seen it, but it's clear and evident that our vice president is being groomed as the person to run, as the most likely person. And it's important to watch how he does in these next couple of years, because then there'll be a lot of confidence. Okay, if Trump goes, but if we get this guy in, we're not losing a lot. That's going to have a lot to say. And I happen to, if you ask me for that person about, I'll run and watch him before I'd run and watch Trump, if that helps your viewer.
Okay. All righty. Jemima Puddle Duck, I love the name, is wanting to know about GDX and Newmont. Are you eyeing them at all? At what level would you put them as a buy?
I'm glad you're not asking me to spell that, because that would have been a tough one. But yeah, listen, they're all, the mining shares are just, as you and I speak here this Friday, we were just touching about to touch new all-time highs on gold. The fourth quarter earnings are going to come out, even from Newmont, which is struggling compared to a couple others. But they're printing money now, the major mining producers. And as we go up toward 3,000, they're going to print even more money. So I'm highly favorable to majors, even the ones that might have had more difficulties. There may be one that's a household name that I might not buy here, because I think they have big problems in West Africa, and that's Barrick. That probably be the one major that I wouldn't run out to buy right now, but basically anything else I'd have no problem owning.
Okay. I'm going to share my screen here, and then we'll just, we can get a visual representation of it here. So here's gold. Like you said, tapping on the door of all-time highs here. It looks like we might have just gotten really close. So all-time high, as far as I can see it, is 2801, and we are just within spitting distance of that now, about $20. Maybe just kind of give us your macro thoughts right here on gold. What do you think?
It's important, that technical chart you have. So if you look at that high, and that was in October when I came out and felt bullion needed a correction, it had a phenomenal correction. It pulled back to where that first one, then it made a higher low, and it went back up, then it made a higher low, and it's just a beautiful picture. It's something that's trading just fantastic. And somebody put it out. I know I put it up on my own tweet page, and I got to find it again. They went back 50-year chart, and they drew a cup and handle that's just breaking out. And, we talked about a 20-year cup and handle a couple of years ago that we broke out of, but a 50-year one is just a tremendous point. So I think this is kind of, this is the cup. And then we've had the handle, and they said that's the breakout there. And it's just phenomenal technically. Now, I know you're kind of like me. You use both technical and fundamental.
Mm-hmm.
And I like to argue that one supports or gives you second thoughts on the other. So you have this great fundamental story, but then you go look at the chart and say, man, it doesn't really show there. More times than not, it shows technically before it does fundamentally, because smart money or people that are aware if change is good or bad are already making their bets, and you're able to see that in the charts. But the gold chart is it's just so hard to look at it. And can I tell you this, Steve?
Hmm.
I've been at this, I'm going to my 41st year. I've never seen anything trading at an all-time high where almost no one outside of us little people that are involved with it even say a word. You could turn on the financial media today, and I can assure you there wasn't one comment at all about gold at or near an all-time high. It's just it's so performing so well, and I hope and people still keep treating it like a relic, because like I've said to someone earlier today, when it's well above 3,000 and the speculative bubble breaks, these are the people who are going to come in and chase it, and that's when we're going to have to start thinking about selling some when those type finally show up at the door. But right now, it looks like it has only one real way to go over the long term, and that's higher.
Yeah. And to put that into perspective here, so here's the gold chart, and then here's GDX, and these are some of the highs back here in 2012, and we're just stomping around here down below, and then here's your Newmont off from some highs there. So, yeah, I think we got a lot.
And I'm sorry to interrupt, Steve. If you happen to go to the junior end, if you want to put GDXJ, that's one of the representatives that people use, but they are just nowhere near levels to match,
Right.
15 years ago when gold was $1,000 lower and all. So only one or two things, as I said to someone today, a dear friend, someone that huge player in this business. Either gold has gotten way ahead of itself and it's coming back, or the juniors are going to be like a rubber band, and the majors, and springboard to get closer to how gold is performing. There's a huge move coming in those. You have to believe, because they're so beaten up and no one likes them, the move has to be to the up. Can't imagine them going much lower than they've already been.
I hope you're right, sir. I am literally betting on it. Okay. Speaking of juniors, got a question here. Do you have any hard and fast rules for cutting your losses in juniors?
Here's what I tell people. Some don't like this answer. I don't think you should be buying a junior resource stock unless you're prepared to lose a serious part, if not all of it. It's not like a general common stock. Oh, I can put a 10% stop loss or 15%. You have to go in the same way. Hopefully you walk in the casino. Listen, if I lose my money today and I walk out with nothing, okay, my life continues, yada, yada, yada. So I'm not a great believer. Now, one thing that happens is, listen, most of these things are going to be decided by the drill bit. At the end of the day, do they find it, or do they find more, or whatever the case is, especially on the junior end and all. And remember, for every one or two that does, many, many more are not. So a strictly buy and hold and forget is not a good way either. But I really think you have to commit so you don't use scared money, because a lot of times, almost always, it seems like these things take longer and have to go through bigger downdrafts before they actually become the moonshots that some people always thought they could be. So I personally don't go in unless I'm prepared to lose a good part, if not all of it. And I think that's the better way of going about it.
Yeah, they can have some pretty radical pullbacks, and this is one that is my favorite that I've been following for years. And this was Rio 2, and I was just buying back here. When was this? In like 2021, and just an 80% pullback, and it was all due because they had chinchillas on the property. Basically, it was the government saying you can't continue with the project, and it took another 3 years before they finally started construction because of that. So these are some radical pullbacks. Really wishing I'd bought more down here at 10 cents, but hindsight's 2020. I can see straight looking backwards. But yeah, some pretty gnarly pullbacks. But I never sold, believe in the project, and it looks like it's going to happen. So Long run. Okay, John wants to know. Please ask Peter why the largest shareholder in Arizona Metals is not on the board. So he's talking about Michael.
I can presume he's talking about Michael Gentile. I don't want to speak or put words in Michael's mouth because I greatly cherish the personal relationship that I have with him besides business. Uh, let's just go back to the change that took place last year in management. I can assure you that Michael Gentile was working behind the scenes as a major shareholder for the best interest of all shareholders. Let me just put it that way. And I think change was coming, either it was going to be that way or another way. I think he feels that he could do more just as the major shareholder than on the board. But think about this. If he went on the board tomorrow, he couldn't have the conversations in the way that we currently have. If you remove his comments and my comments and do a social media search for anybody else talking about the company or writing about it, you'll have a long time before you find something. So he's been invaluable to someone like me and to someone that's also a major shareholder to know his opinion. You expressed your own view about it. You got involved with the company. You reached out to them multiple times. You offered an opportunity to be interviewed and so forth. And you got what?
Silence.
Silence. Okay. So people say to me, P, why are you harping on this? It's critical. It's absolutely critical. If you think about this, if you mind me just taking a minute, Steve, it is such a small market to begin with. It's not like, and it's a market that's been in a bear market for a long time. So there's not like an abundance of people. If one person doesn't work out, somebody else is going to take their place and all. Now, every other company like them is their competitor. So there's a handful of people. And so your competitors are out every day trying to find those few people. What are you doing? You're not. How do you move? So even if you end up having great results, if you don't have a wide enough audience, you're not going to get a full bang for the buck. And to me, doing a couple of videos or a couple of conferences, that's the bare minimum. You and I just talked. You talked before. If you made me bring this up, I don't think I'm causing you any issue. You said you met Sam Lee for the first time up in Vancouver that runs North Dallas Copper and Gold. Phenomenal. Textbook how a junior CEO should be. Brings every possible good quality, a mixture enough to it and all. Look at that company's marketing. Look, there isn't a week go by where they're not at a conference and not being interviewed and articles are coming out. Their website is always full of articles related to the business and all. And then go look at Arizona Metals at the same thing. And so tell me, apples to oranges. I don't think I'm talking about rocket scientists here. So, I'm hoping it changes. I do believe this, Steve. I believe they have such a phenomenal project there that at the end of the day, the drill bit will save us, but I'm afraid we may not reach levels that we might have reached before, because one of the things we don't have going for us here, another side, management doesn't own a lot of stock. I can tell you right now, myself, Michael, and a few other people probably could have almost 20% of the company. I don't think they have 1% or 2% at most. And so the problem arises now is what happens if a cheap bid comes along? Let's just say they get fortunate and K2 turns out to be another deposit. And we're all thrilled. It goes up 50 cents for a dollar. When realistically, we always thought it could be worth 8 or 10, but now somebody offers 350. You know what? Most people right now will take that 350, even if they agree with me, can go to 8. Because they've been in it so long, they've been hammered and they feel liquid, and there's always something else that looks attractive. And that's why I keep trying to tell a company like this, you have to stay active with your shareholders. You have to keep them informed and feeling like things are moving in the right direction. And this company, to my opinion, and based on all the emails I get, is not doing that as of now.
Yeah, I was a little frustrated. I offered several times, reached out, called, emailed, everything. Free promotion. Come on, I mean, like I've had Doug Casey on the show several times, and he calls it his 9 P's. Number 1 is people. Number 2, and one of the P's is promotion. And there's just nothing. And you're right. There is a finite amount of us. There's not very many in the junior resource sector, and we want to bet on copper. And if you can't get a response from one, then there's always another copper junior,
Let me close on this one, Steve. I would say that if you contacted 999 other juniors IR person, not even the CEO, hey, would you like to come on my show and tell the story about your company? You know what that person say? What day? What time?
Yep.
I think that kind of answers, when, like you said, you weren't looking to charge. You don't even do that. It wasn't like there are people out there, you come on free and then you hit them up to try to get them to. There are a lot of people that do that. You got to read a lot of people's disclaimers. I know that's not how you work and all. That's one of the reasons I'm glad to speak to you. It's very, very frustrating. And what makes it more frustrating is they have such a phenomenal project. If the project wasn't working out, I can almost say, okay, you know what? At the end of the day, it's right. They don't have it. It don't matter. But when you have such great projects and you're treating the retail shareholder as if, we should just be lucky, silent, and put tape over our mouths, I'm sorry, I can't.
Yeah, I agree. Okay, so I interviewed Sam Lee of North Isle. I like you, was pretty impressed. This was my first time really looking at the project. Maybe tell us about North Isle Copper and Gold.
Well, again, that's a Michael Gentili, one of the major. I think he's one of the major shows. Really good, deep management. There's a company that put their money where their mouth is. In fact, Sam Lee last year, I think for well over $500,000, maybe even closer to $1 million, but somewhere's in that range, went ahead and exercised options that would not, they were just at in the money or just below it in order to facilitate that they could do certain things, which ended up being great. And, they found new stuff and all kind of stuff. Put your money where your mouth is. That's one company that has over and over again. Phenomenal projects. Really, the joke among us is they should really change the name to Gold and Copper, because right now, gold is even more valuable to them than their copper is. He's the textbook CEO. If a book was written how a CEO should run a junior, his picture and his resume should be in it. So I'm extremely bullish, and it's like night and day when you ask me to talk about, like I said earlier, a week doesn't go by where they're not speaking somewheres and appearing somewheres or talking to someone and all. And that's how you help enhance shareholder value, especially now, is it coincidence that they happen to have a lot of their own money in it? I learned another lesson after 40 years, dollar for dollar, when when insiders own a lot of stock, on average, they just seem to work a little harder.
Yes, they have what we call a vested interest. I asked him about that. This interview will come out either next week or the week after. I can't remember. We got it on the schedule. And he either owns 2 or 4% of the company. I mean, like, he wants to see this succeed. And I don't own any yet. But yeah, I was impressed.
Yeah, management owns a very large stake and all. But the key was that he took a large sum of money and exercised options that were really, might have not even been in the money, or they were just in the money. And that's putting your money where your mouth is.
Yeah. Okay, Mike has a question. Peter's latest thoughts on Amex Exploration and Independence Gold.
Well, Amex is part of my belief in Quebec. I believe there's going to be a real rash of mergers and acquisitions, not only in that province, but others. Amex is the leading one. I think one of the things that's missing, there's a log jam right now. It just takes one deal, and then the majors are going to go, we can't sit around anymore. And I think they're going to step up. But this is a company that already had a significant major take a position in them. Phenomenal project. I've said it, 10 to 20% downside risk, 100, 200% upside. One of the first to go, I think, in this takeover beliefs, I believe is going to occur this year. Now, the other company, Independence Gold, I got involved simply because of who the CEO was. Randy Turner, I think he's 50 years in the business. You need at least your left hand to add up all the success that he had on different projects and companies that he sold. Drilling a very interesting project in British Columbia, just keeps discovering new veins and improving the asset. And he is frugal is not the right word. Let's just say that most of the money is spent on looking for gold, not looking for gold in people's pockets. And sometimes that disturbs people and all, but Randy he's just an old veteran that's had great success. And a lot of times the key to juniors is the management. We kind of just discussed a little bit that earlier. So both of those companies, I think, are juniors that will eventually be sold or taken over or merged for a profit for whoever may own the shares right now.
Okay. You like them
I
both.
have to declare both of them are, and I got to just thought about it. I got to say this about both now. I own all three, and they're also blog sponsors. So
Okay. Yes. What do we call that? Conflict of interest. Okay. Any final thoughts? Anything I didn't ask that I should have? Anything you want to say?
well, we're probably not going to be invited to the Arizona Metals Christmas party. Well, other than that, I will just tell you that this is a unique period of time. This is a radical change happening. A lot of people in the stock market have bet that all things are going to continue even better. So there's not a lot of room for error. And while I very, very hope that the initial days we've seen, we continue to see it, the stock market is on stilts. And if there's any hiccup on the Trump side of things, we could see at least a very severe correction, if not a turn into a bear market. We already discussed bonds. I said that, I stick with T-bills right now, 1 year or less. And the old relic that somehow managed to work for 2,000 years looks like it still has a life in it. Like I said earlier, when gold first went above 2,000, it will see 3,000 without ever going under 2,000. And we could see that 3,000 sooner than when even I expected.
Okay. I hear you saying build your moat.
Yeah, just talking because I know you're a U.S. resident, separate in our financial planning. Most people don't have a moat. Just around there, 2/3 of Americans are working paycheck to paycheck. 75% of the people, Steve, that I see, and this is important for your viewers to know, that come into our planning group are still spending more than they make. So even if they're making a lot of money, they're actually spending more than even that is. And that's a recipe for trouble down the road. And that's why I say that to be a live chicken versus a dead duck, and less is more is my philosophy. I think that's the appropriate way to go.
Yeah, I'm seeing the same thing that you are too with the stock market. I feel like the S&P going to 7,000 is highly more unlikely than it going to 5. I'm surprised. I'm surprised we're hitting on tapping on all-time highs now as well. I would have thought it's more likely to go down from here.
Can I make one other point, Steve, that a lot of people haven't spoken about? And if you haven't, this is a good thing for you to focus for yourself.
Yeah.
The biggest change is someone asked me a week ago, I did an interview. Like I said, I'm in my 41st year. I don't expect I'm going to be in the 51st year, but I am going to tell you that one of the single biggest change in the stock market since I started was in 1984, almost 90% of the trading was retail investors. Now over half the money is in what's called passive investments, which are basically funds, exchange traded funds, indices, that the manager is not to be responsible for actively trading. It's really there to just match the performance of something. The most biggest one uses to match the performance of the S&P 500. There's like 478 of them funds that are doing that. And in those 478 funds, Apple is in 410 of them.
Wow.
So as we continue to see net flows into stocks, they flow into the passive funds. The manager can't say, well, let me keep some cash here. These things are too expensive. No, he has to match, or she has to match that performance. And they basically have to buy Apple, whether they like it or not. Now, that was all good when it was happening bullishly. But if we ever have a turn down in the market and people start to want to liquidate or raise cash, that manager's not going to have the ability to go, whoa, I don't want to sell Apple here. It's too good of a stock. I'm going to have no choice. And then in the other less than half, but somewhere say it's 50-50 of that, 75% of it is in algorithm trading programs that are using sophisticated options or news events. Very few percentage of people are still buying stocks that they used to in 1984 to be part owner of the business and a retail. And so one of the mistakes that I find, especially when I talk to people my old age with no hair or gray hair, you can't treat the market like you did in the 80s and 90s. It's a totally different species now. And that's an important fact that people to understand. While it's aided it going up and it's still seeing net flows, if you see net outflows out of the passive funds, that market can go down very hard and fast.
Yeah, I knew that passive investments were a big portion of it, but I did not know that it was half.
It's over half, Steve. It's over half. It's like 56% or some number that was floated out there. Yeah.
That's scary. And I got to imagine, I'm just guessing here, but I got to imagine that most people are probably looking at their quarterly statements for their 401k. Sometimes they miss a quarterly statement, and when they see that one where it's down 20%, that's when they're going,
That'll shake them up, but they'll still hold because the industry's trained to say, hold on, buy and hold is the segment. They show all the charts for years. It always paid off. But what they don't show them, when you go back 100 years, there were several periods. One were as long as 27 years it took for the market to make up for the loss that it had. Well, you're 40, yeah, you don't have to worry too much, but you're like me or a lot of seniors that are still so much over-owned in stocks. You're not going to have 15, 20 years to make. You can't have bought a 20 or 25% decline down. And even if it just declines, it doesn't go even further. Here's the other issue. People are living such a lifestyle that they've gotten used to these above average returns. So even if the stock market is flat, that still can hurt some people because they've been counting on that 10 or 15% to keep living their lifestyle that they've grown accustomed to. So those are the things that don't get discussed all the time. We don't get in depth, but these are things I think are important. And I'm glad and I appreciate you allowing me to share that with your audience.
yeah, thank you. Maybe you saved some of them a lot of money. Peter, if viewers want to get a hold of you and follow your work, how can they do so?
Well, petergrandich.com is the website, but most of my work now is driven through either the YouTube, where I put interviews like this up on my channel, but mostly on my X page. I think it's the single best way to communicate. Within a few seconds, you can tell the world what you think.
Awesome. We will put links.
Some people do tell me what they think about me very fast too, so it's okay.
It goes both ways. Right. Well, thank you, Peter. We'll put links to your website, YouTube, and X down below. Thank you for coming back on the show.
Keep up the good work, Steve. One of the main reasons I like coming here, you're an honest, honorable young man that's trying to do a good job. So just remember what I told you before we started. Don't let your ego get in the way, and don't become a legend in your own mind like I once did.
Okay. Thank you, Peter. Good advice. And thank you for tuning in. Be sure to support the show and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.